I think let's just start. I'm sure it won't be too long. So what I want us to do is I want us to open up exercise 5.2. So yeah, I want us to do 5.2, and then we'll do one more, and then we'll do some theory-related questions. So if we can just open up 5.2. I think we've actually done the harder questions in this module, so we should be able to get through this fairly quickly. Plus, it's not that long. They just want us to do one or two things here. So let me just zoom in. Okay, cool. So let's read. Let's see what's going on over there. Under the required, it says prepare the partner's current accounts in T form. All right. In the general ledger of Team Galore for the year ended 28 February 2005. Round all amounts to the nearest rand. Okay. So we're doing exercise 5.2. All right. And then they just want us to do the general ledger for the current accounts for the respective partners. Okay. So up top there it says the following information was taken from the books of Teamwork Galore. Balances of Teamwork Galore at the financial year end, 28 February 2005. Okay, we've got the balances over there. And then appropriations, according to partnership agreement at the financial year end, 28 February 2005. Interest on capital must be appropriated at 7.5% per annum. Capital balances remain constant. Okay? Right. So here all that we're really doing is what we did yesterday. But again, now we're doing it from a different perspective, where our focus is obviously on the partners. Remember yesterday in the second session, the focus was on the appropriation account. Okay? And in the first session yesterday, the focus was on the whole process, basically. Okay? Right. So, what must we do with this interest? Interest on capital account. You can see we have Unashi capital account there. Sorry, current account on the board or on the projector. Okay, so first thing you want to look at what is his or her capital balance. And we see that, okay, cool, it's a credit balance. But before we bother about whether we're going to debit or credit, we say, okay, what is the interest on their capital? We know that the interest rate is 7%, 7.5%, so 0.075. And this gives us what? $6,000. Okay. So now that we have that 6,000, are we penalizing or are we rewarding Unashi? We're rewarding because he or she obviously has a credit balance on their capital, right? On their capital balance. So we come to the credit side. Since we're rewarding, okay, and here we write interest. Oops. On capital. Okay, and there we just plug in that 6,000. Right. Cool. As you can see there, I already just plugged in the balance on the current account. Okay. Then the next thing is obviously we can then go obviously to the next partner and do the same. Okay. At this stage, we already know that we're crediting since, what is this? What's the partner's name here? I'm just going to say G. Also has a credit balance, 50,000 times 0.075. We're doing exercise 3.2. And what's the interest over there? 5.2. Thank you. 5.2. What's the interest on G's account? 3,700. Okay, so 750. Okay, thank you. Thank you for that. Okay. So we've recorded that. We've dealt with the first adjustment. We can then move on to the next. Interest on drawings must be appropriated at 8.25% per annum, as if the drawings were made 3 months prior to the end of the financial year. Cool, so we've seen this before. Nothing hectic here. All we need to do is look at the drawings there for the respective partners. And for G, it was 5,000. So since we're here, might as well just deal with it now. So 5,000 times, what was the interest rate again? 0.0825. And we also know that we need to apportion that for 3 months. 3 divided by 12. So what do we get? And whilst you guys are calculating that, I'm just going to copy formula here for Unashi. And their drawings was how much? 8,000. So how much do we have? What's the interest on drawings? 103 Rand. 1-3. Okay. And for Unashi, what do we have? 165. Cool. Right. So now are we debiting or crediting this interest on drawings? Are we penalizing or are we rewarding them? What's going on? Penalizing. Okay. So are we going to credit or debit? We're going to debit. Okay. Hmm. Okay, cool. Now that that's done, we can then move on to the next adjustment, and there we have interest on current accounts must be appropriated at 9.75% per annum on opening balances. Okay, fortunately, no adjustments need to take place there. So again, we see Unashi has a balance of 16,000 and G has a balance of 10,000. So 10,000 times 0.0975. And what does that give us? Are you okay? What amounts are we getting there when we calculate? You saying what? For G, 975. And for Unashi, 1,560 for some stuff. And what are we doing with this interest on current accounts? What are we doing? Are we debiting, crediting? What's happening? Let's start with Unashi. What must happen? Well, one thing we know is that Unashi has a credit balance of, sorry, a debit balance of 16,000. Is that a good thing or a bad thing? It's a bad thing. So are we going to penalize or reward? We're going to penalize. So what do we do when we penalize? We debit, okay? So that's going to be interest on current account. Or current. I see that's how they do it in your books there. And there we said that was said that was 1,560. Right. And obviously, since G has got a credit balance, they were obviously just going to credit his or her account. Okay, right. So that's done. Now we can move on to the next. It says both partners must receive an annual salary at the end of the financial year. Unashi 105,300. Are we going to debit or credit that? Are we going to debit? Why did you say we're going to debit it? Yes, we are paying them. Money is giving money. Okay? Because it's a reward for them. It's a benefit for them. Okay? So here, salary And how much was it? 105, 300, huh? Awesome. I'm going to do the exact same thing here. Yeah, how much was it? 99, 450. Right. Then it says G must receive an annual bonus of 29,250 at the end of the financial year. So no problem. Here we just write bonus to partner. $29. Okay, dealt with that. 6, they say 23,400 is to be transferred to the replacement reserve at the financial year end. Okay. So what are we supposed to do with that? What are we supposed to do with that information? The replacement reserve. In other words, retained earnings. What are we going to do with that? How much did they say it was? 23,400. That's the same replacement reserve that they gave us in 5.3. Remember the exercise we did yesterday? So 23,400. So somebody tell me. Come. Those of you who came late, the deal is the faster we do this, the sooner I let you go. We only have discussion questions after this. Credit when? It's being transferred. Debit account. Yeah. Debit replacement reserve account. What did we do yesterday in 4.3? Yesterday in 4.3, what did we do with the replacement reserve? Likewise, yesterday they told us that we are transferring 23,400 to the replacement reserve. We debited the appropriation account, right? Mm-hmm. And what was the contra account when we debited the appropriation account? What did we write there on that debit? We wrote replacement reserve. Has that got anything to do with any of the current accounts? It's got nothing to do with it. Okay? So what am I trying to show you? This is why we practice questions, because they'll give you information that is not necessarily necessary for what you are actually doing, to test you. How well do you know your story? Okay? So we don't necessarily need that in the general ledgers for the current accounts, but you're going to see where we actually do need that information. Okay? So in order to wrap up our current accounts, we know that drawings gets closed off to the current account. So we know we need to actually record the drawings for both these partners. Okay, so for Unashi, for drawings, now I know if that comes in the test, you guys will never forget how to treat it. So drawings there was 8,000. Okay, and then let's quickly do that for G as well. Drawings. And the drawings there was 5,000. Cool. Let me just do this. It'll look a bit neater. Okay, right. Is there anything else that we need to do here? Think about it. Is there anything else that we need to do in the respective current accounts? What did we do? What was the last thing that we did in the appropriation account? Yesterday in 5.3. We split the profits. Okay? And that's also what we need to do here. If you look at point 7, it says the remaining profits must be split between the partners in the following ratios. Okay? Remember, we pay out the profits to the current account. We reward them in the current account and penalize them there as well. So we need to do that calculation for profit, like how much profit do we have left? So we look there in our profit and loss. We had a profit of, how do we know that it's a profit? First and foremost, before I go any further, how do we know that that 585,000 is a profit? It's a credit, right? 100%. Okay, so 585. So if it was a debit, then we would add and subtract all the adjustments that we've done, and then we'd say we're splitting the losses between the partners. The same way we would split the profits, okay? So if ever they give you guys a loss, it's the same process. Same process, okay? Only you're splitting a loss instead of splitting a profit. So like now we already know that since we're splitting a profit, okay, we're obviously going to credit their respective accounts because they're receiving money. Does that make sense? But if it was a loss, that means we would be debiting their respective accounts. Okay, but anyway, let's deal with this here. So first adjustment that we dealt with was obviously interest on capital. And for Unashi, it was 6,000. Okay, and for G, it was how much? 3,750. Okay, then we had interest on current account, or interest. We can start with interest on drawings. That's a positive. Was that the next thing? Yes, it was interest on drawings. So that was a positive 165 from Unashi and a positive 103, 13 cents. Okay, and then we had, what else? The next one was interest on the current accounts. So, yep, there we had positive 1,560 from Unashi, and I think a negative 975. Yes, a negative 975 because we were paying G. Then after that we had the salaries, which was 105,300 for Unashi and 99,450 for G. Then we obviously had the bonus that we needed to pay out to G, which was 20, how much? 29,250. And then, guess what? We have the replacement reserve. Okay? We have to deduct that off of this profit because we're keeping it. We're not distributing it to him. Does that make sense? Okay? So we're deducting that 23,400, I believe it is. Yes. Okay? So that's where we would then use that information. Okay? And then finally, how much do we have left over to share between the partners? Somebody. Right? 318,750 and 3 rand 13 cents. Thank you very much. 13 cents. Okay, cool. So now that we have that, we can obviously then obviously allocate those funds to the respective partners. So we then just write appropriation here. Okay, and I'm just going to do the calculation below here. We're taking this 318,703 and 13 cents, and then we're saying, what is Unashi's share? 6 of 11. Okay, 6 of 11. 100%. 6 divided by 11. And what does that give us? 172,000, 73,838. Awesome stuff. Awesome stuff. Cool. So we've got that done for Nashi. We need to now go do the same for G. Okay. Okay. And what is G's share of the pie? 5 over 11, right? How much are we actually giving? 144,865.06 cents. Right. Okay, and I've obviously just left in the balances over there for you guys. Okay. Right. Not rocket science, right? It's not too bad, huh? Okay. So that's unit 5 for you. That's unit 5 for you. All we have left to do is these discussion questions. Any questions, by the way, in relation to that? So what's important here is obviously just understanding what are they asking us to do in the process. Because think about it like this. It obviously starts in the journals, the general journal. All right, we're recording all the year-end adjustments. Okay. Then obviously we post to the general ledger. After you post to the general ledger, then obviously there are the statements that follow. Remember, we have the statement of changes in equity. We have the statement of financial position as well. That also gets affected. Okay. Remember, our focus here is only these equity accounts. Okay. So that's why we're not bothered with other things, like, for instance, your profit and loss. We're only using the profit to see how much are we distributing or paying to the partners, or how much are we distributing in terms of the losses that need to be covered. Okay, but that's it. So that is your Unit 5. I want us to just touch on question 5.6, find out what they're asking there. And then obviously touch on the last one, I think it's 5.9, 5.7, sorry. So let's see, what are they asking? What do they want us to talk about? So in 5.6, under the required, they say discuss the advantages of bringing in a partner that might have expertise in a different field than you in order to make your business more successful. Are there any disadvantages to this approach? Okay. And then it says large corporations often tender for multi-billion rand deals, which they intend to win by presenting a group of experts in different fields. For example, assume the company tenders for the financing of a large engineering project. Best practice would be to include an engineer, attorney, accountant, negotiator, administrator, and a secretary in the team that intends to undertake this project. Do you think the same principle applies to small enterprises? Definitely not. Okay, anyway, this is your suggested answer right here. They say there are distinct advantages in forming a partnership of some sort. Very often, one would find someone with lots of money but no entrepreneurial skills that forms a partnership with another person that has no money but has a lot of skills, okay? On their own, making the business work will be a futile exercise, okay? However, combining their resources could make all the difference. Of course, there are drawbacks too. You now have to share the dough. Since there are more stakeholders of the equity that is on offer. In a partnership, there could be legal issues too if one partner were to enter into a fraudulent deal without the other's knowledge. Both partners could end up losing everything, even their personal possessions. Okay, right, so there you can really just see the thing that they're highlighting is obviously when we put our different resources, skill sets together, we can obviously do more, but obviously there's a risk in that obviously one could participate in fraud, and then that obviously can affect the business and affect you in your personal capacity. That's assuming you go into a partnership. You could go into a proper private company. You'd get the benefits then, obviously, of having our different skill sets, you know, available to the business or the business initiative that we're obviously trying to achieve, while at the same time we protect our personal assets from actually affecting not only the business but also the shareholders of the business. Okay, so yeah, obviously we could even go on and on discussing this subject matter, but what I can tell you here now is that no man is an island, and nobody has all the time in the world to go and acquire skills in law, skills in business, skills in negotiation, and it's not efficient because whilst you're doing that, you could actually be growing the business, you know. So a lot of the time we want to have the whole size of the pie, but there really is quite a benefit to actually partnering with each other as human beings. Another way that you could also go about it is you don't necessarily have to be partners, but what you could do is you could obviously hire consultants to handle the legal affairs or to do the accounting for you. All right. That said, let's move on. I don't know if any of you guys want to say anything or ask any questions. Okay. That changes. By all means, feel free to do so. And then question 5.7, another discussion question that they have for us there. Differentiate between sole proprietorship and a partnership under the headings listed in the below table. Okay, so this is not rocket science. I think a lot of you guys should know this already. So ownership in a sole proprietorship, it's just one person, and then with a partnership could be 2 or more. And I think the cap is like on 19 people in one partnership, if I'm not mistaken. But I know there's a limit, and then you have to change it into something else altogether. Forgive me, I'm not a business management lecturer. It's 20. Thank you so much. 20 is the limit. Okay. Then capital contribution. All right. The owner obviously can only contribute what they have, right? Which obviously is a whole lot more limiting than when you have a whole host of different partners. So more capital can be accumulated because there can be up to 20 contributors. Oh, so you guys are definitely on the money there. Right. Then control. Vested in the sole owner depends on the partnership agreement, all right? Who has the biggest stake and so forth. Some partners might be active, others might be passive partners. All right, continuity. The business continues to exist upon the death of the owner. Interesting. Partnership ceases to exist upon the death of a partner. Okay. Liability, unlimited liability. Sole owner is personally liable for all the debits, all the debts of the business. Okay. Unlimited liability. Partners are jointly or severally liable for the debts of the business. Okay. Taxation. Profits are taxed in the hands of the owner, because they just see you as one person, right? And then when it comes to the partnership, profits are shared according to the agreement and are taxed in the hands of the partners. Personally, I wouldn't bother opening either one of these. I wouldn't open a sole trader. I wouldn't open a partnership. I would open up a private company, because you get the benefits of the stuff that you would get in these, and you get protection, and you get continuity. So it doesn't make sense to me why you would actually open a partnership, right? Plus, whenever you want to add people to it, you have to redo your paperwork, recreate the company or partnership. I don't know, it just doesn't make much sense to me. But anyway, that is your chapter 5, guys. That's your chapter 5. So, yeah. I don't know if you have any questions or thoughts on anything accounting.